Good morning, ladies and gentlemen, or good afternoon, depending where you are. Welcome in Advanced Room. Today we have a great special session where we're going to analyze in deep in the market. And of course, as every Tuesday, I have the pleasure to do that with Juni. Good morning, Juni. How are you? How was everything?
Good morning, Giancarlo. Everything is great. Watching markets. How are you?
Good. Was Yesterday was an intensive day because we have assist very important movement due to um, the the earnings season report of Goldman Sachs before the USA Open and after the Netflix and Tesla. Essentially, we have assist very nervous is in the market, and today will be interesting to see if market is ready to do some retracement or we can continue to going up a little more at least until the first part of August, because also as you know, we have the Federal Reserve meeting next week. Investors are very positive because inflation continue to going down. The quarter essentially remained quite good until now, and of course, Federal Reserve it seems ready to start the pause of interest rate hike. So we see that Standard & Poor here we have has a vertical uptrend from April, a small pause that never hit the um, the bullish trend, and of course, here we are just a distance of 5% from historical hikes. I would like also to say to give a big hello to our friends from YouTube, and of course, if you have any question, you can ask us in any moment, any doubt, idea. We are at your disposal. Juliet, how was your view for the market in this moment? You remain bullish, or you start to see some sign of weakness, so we have to take a little care?
Uh, I still see it bullish, Giancarlo. Nothing changed. I am not very hyped for this bullishness. Just the trend is bullish. There is no any single weakness on the market, as you said. So better follow the trend, I'll say. How the markets are looking in terms of fundamental perspective, to me, I expect bad earning reports, worse earning reports. Tesla already disappointed. Um, for the sector, automotive sector, we have really shrinking in rejections of the credits for automotive sector, especially overall, we have big shrink on the rejections of credit rejections. But first time for automotive sector since 2010, we have rejections, credit rejections exceeding credit appliance,
Yeah,
meaning
I know.
that for the near future, this is bad news for the economy. As one of the largest part of the economy, automotive sector, very, very important part, suggesting that near future, we will have significant decline. And I do expect weakness on stocks, automotive stocks, even though some of them took care and declined their prices of the cars, like Ford and so. Tesla is leading the European markets for the first time. It's the most sold cars in Europe,
Hmm.
beating Dacia Romanian car. But I see near future it's decline in the economic activity, which is not bearish for the stock market, bearish for the stocks, but depends if that makes Fed pulse and even pivot. That's gonna support the markets. As of now, I don't have very clear vision how the markets are going to move, for what, on what they will react. Currently, we have extremely strong extended trends on the S&P, and I am not very interested to buy here because the price extended a lot. I could be interested from short-term sell, maybe scalping, maybe intraday, maybe intra-week, short if there is signal, but there is no signal. The trend is very strong. Maybe buy on the pullback. But I rather expect Fed to bring the real volatility next week. Next week
Yeah.
will be absolutely important week. We will have a lot of central banks. We will have Japan, which is going to play as a key factor also for the markets. USA, yeah, retail sales are doing good, even though they were red, less than expected. They are still positive, 0.3%, like higher than zero, which shows some activity. But inflation data, I expect to jump, Giancarlo.
Mhm.
We got softening in inflation data, but base effect will, I think this is because of the base effect as well. And soon we will probably have the first signals that inflation is peaking up again. And Fed might, like I usually think that this rate hike that Fed will do, 25 basis points next week,
Yeah.
as they said, I think it's unnecessary. Like it is nonsense to me. I don't know why they will do that. They really want to kill the real economy like
Unless.
this. And no, the real economy didn't cause this inflation. The inflation is caused by the government. And so I am interested to see what Fed will bring as an information. And if inflation starts peaking again, if they will increase interest rates. On one hand, they can still continue increase interest rates because they have, on other hand, over $2 trillion that they can use for liquidity in the economy. And in one hand, they will continue tightening. With the other hand, they will put money in the economy. And when this money
Yeah.
actually goes really on lower levels, then probably they will pivot. So it's a little bit difficult to say what they will do. I will
Yeah.
just keep an eye on the trend on the price action, and I will follow the price action, and I will wait for more information.
I'm totally agree because the big problem here is to understand if I think that there are also a political reason because Federal Reserve push a little more on the economy because there are a lot of company in USA stock that now really are near to default. So the idea is that practically the situation is to create a condition to create a more strong market with the best company. So I continue to see for a part the Fed that want to change something in the market, create a stronger condition, and with this programmatic destruction of a lot of financial company, because this company represent, if I remember, the 37% of all the stock quote, and this is the higher percentage of company in difficulties from the crisis of 2008. So practically, there are programming. I think that's the idea of Fed is probably to create a better market. But anyway, I'm agree that this rise of interest rate has no sense. Is I think that is just also to have more space to cut from next year, and they can manage better this type of movement. Anyway, the market continue to going up. There are the trend of AI, inflation down, Fed pause. Market see the positive element, but of course, as you mentioned, very important, the rejection rate in USA is very high. The percentage from February that was 17 as a right more of 20%, and practically more of one family, about five in USA, don't receive any credit. So of course, this is not a good news, but we know that the total effect of this Fed policy will be hitting the real economy in a period of years. Normally, we need 18 months to see the big effect. So, I think that meanwhile, the volunteer is to sustain a strong bullish market, and until not change really the situation in terms of sentiment positioning, this market will continue to go bullish. In terms of cyclical situation, what we can say is that market is near is on a monthly setup, and normally after this data, market tend to be choppy before to start some retracement from the middle of August until the end of September. So probably as Juni mentioned, a Federal Reserve meeting will create a lot of volatility. Market could start this retracement that is physiological retracement, nothing reversal. That will be very good to use to buy. Anyway, today we have a lot of interesting news to follow, especially this afternoon. A lot of data referring to real estate market existing home sale. That is very interesting to see the real estate market continue create a lot of increases. The Philadelphia Manufacturing Index and initial job claims. And not a big market mover, of course, but will be very helpful to see the market condition. Let me say hello to our trader. Here we have Tony and Cangelani. Good morning, everyone. Also for you guys, if you have any question, me and Juni will be very happy to answer to any doubts or request. Juni, let's, if you want, let's take a look. I would like to discuss with you, probably because I know your position about that inflation, of course, will remain for a decade. And of course, you see this drop like a temporary drop that inflation could start to go up. In this sense, we remember that dollar still even with some different aspect, still remain a safe asset, guys. So if the recession could be worst of expectation or there are tension in the market, the dollar could start to go up. But last week, the combo Fed pause plus inflation down plus production inflation PPI, the production inflation index, show a strong sign of drop. It's a combo that create a vertical drop of dollar. Now the question is, do you think that this drop could be absorbed in the next weeks, or we can expect some drop? On a general trend, my yearly target practically this year I will calculate this level 98.47. This is the target I have on dollar from the last end of year. Practically, we have arrived. So the idea, also because for Forex, this movement was incredible. We take great profit, for example, long on euro dollar or pound. But do you think that this uptrend will need a large pause before to continue on Forex market, or dollar essentially will start to recover all this drop very soon?
I am not bullish on dollar that much. I was bullish. Well, we can have strong dollar due to uncertainty and safe haven reasons, but overall, I am because I'm expecting long-term inflation, because I see Fed peak hawkishness is near here. I cannot say that I'm super bullish on dollar, but we can have some dollar strength if Fed sounds too hawkish, if they over deliver, let's say they come with 25 basis points and then they say we will continue to increase, we won't stop, we will be very hawkish. Don't think that we're gonna pause. There, by the way, the most hawkish member of Fed actually left. Nobody knows the reason. He was saying that Fed must increase interest rates with 50 basis points, not with 25, and out of a sudden he decided to leave. So I don't expect a lot hawkishness to come. As I said, Fed increased interest rates too much. As per my understandings, maybe that's something new strategy. Maybe they have something that they know. I'm talking from pure macroeconomic perspective and history. And the reason that inflation we have, like inflation is not here because of bank lending, and controlling it with high interest rates could be problematic, and it can add more inflation for the future. So shortness, strong one leg on dollar, okay, but if I have to take a position for a swing trade, I will rather look for short around 100.